Hello, everyone, and welcome to FP Crypto Decoded, presented by Ndax. Today's session will be about the benefits and challenges of cryptocurrencies. Before we dig into that, though, and hear from our panelists, here's some information to help you participate with us today. If your video quality is slow, try hitting the click here to refresh stream to view our alternate stream. The video quality may decrease a bit, but the audio should remain strong. If you're having any technical difficulties or issues during today's session, please click on the blue help button at the bottom right corner of the webcast page. Assistance will be provided to you by the email with which you registered. To ask a question, simply click on the Questions tab at the far right side of your screen. Enter your question in the window, and we will receive it. It'll be sent directly to us. You can ask a question at any time during the webcast, and we'll try to get to as many as we can during today's packed session. Right now, I'm going to introduce you to your panelists. First off, we have Julia Baranovskaya, who comes to us. She's Chief Compliance Officer at Ndax. Very excited to have you here today, Julia. Then we have Ndax Kulyk, who is Senior Vice President of Growth at Core Scientific. Welcome, Ndax. Glad to have you today.
Thanks for having me.
And finally, we have Jaime Leverton, Chief Executive Officer of Hut 8 Mining Corporation. Welcome, Jaime, and thank you all again for joining us. We also have a special guest today who you'll hear from in a moment. But first, a message from our sponsor, Ndax. As one of Canada's leading cryptocurrency trading platforms, Ndax is thrilled to be the presenting partner of Crypto Decoded. If you're interested in learning more about crypto or ready to begin your investing journey, please, by all means, visit Ndax's website at ndax.io and download the Ndax app, where you can purchase your favorite digital assets easily and securely. So before we get into our discussion today, which I'm looking very forward to, we're going to hear from our special guest. Earlier, I had the opportunity to sit down with Grant Vingeo, who's Chair and CEO of the Ontario Securities Commission, and we talked about how Canada's largest capital markets regulator is approaching the crypto sector. So here now is a short video with some of the highlights from that interview. So thank you so much for joining me here at the Park Hyatt, Toronto.
Oh, it's my pleasure to be here. Look forward to our discussion.
So I wanted to start off by asking you, what is your first memory of thinking about crypto? You've been at the OSC for a while.
Yeah, no, I remember it quite well. I was vice chair at the time, and members of the Launchpad team were coming to me in my role as vice chair to consider novel applications related to token offerings. And it was really the first time I had an opportunity to consider and crunch the issues associated with token offerings. And I found it fascinating because I thought it could really lead to a new form of crowdfunding using tokenization for different assets and be an opportunity for a new demographic of investors through their computers to contribute to building businesses that were offered on a tokenized basis.
And did you think of it at that time like Bitcoin or Ether or some of the cryptos that we think of?
Bitcoin dates back to 2008, and Ether came later, was a Canadian innovation. We had more of a struggle initially in determining the characterization of Bitcoin and Ether and how it fit into the regulatory environment. We were quite confident that most of the token offerings involved security tokens that fell within our regulatory authority. But what we found was that ultimately that Bitcoin and Ether got quite established. There was tremendous interest that evolved and has continued to this day, and it was very commodity-like. And we as regulators have authority certainly over commodities to ensure that there isn't manipulation. And what we ultimately found is that there was tremendous dependence on the crypto asset platforms and the dealers that were distributing the assets. And that led us to realize that investors were not receiving the underlying commodity itself. They were receiving crypto contracts. And those crypto contracts, where they were really dependent on the efforts of others in holding it for them and making sure it was appropriately held in safekeeping, resulted in them being either derivatives or securities. And from that moment forward, and with our reflection on Quadriga, we realized that capital markets regulators needed to step in to create a framework for bringing them within these platforms, within the regulatory system, with at least minimal balanced terms and conditions that allow for innovation but provide for investor protection.
So how does that differ on the policy side and the enforcement side for the OSC with that view?
Well, it means that the crypto asset trading platforms have to be registered if they're offering their services in Ontario as an investment dealer. And if they are providing a framework for trading them within their system, they may have to be recognized as marketplaces as well. We send out a message asking those platforms to come to us so we could examine those systems, and they would be transparent with us about how they operate, and we'd impose terms and conditions that would provide adequate protections from those main concerns. It doesn't protect against loss. These are highly speculative investments or instruments, but we could have a baseline of protections around the controls they have in place, the custodial arrangements, protections in the event, to deter loss of the assets on the platform itself. And for those that didn't engage with us, we've begun to pursue enforcement actions against particularly foreign firms that are offering their services and trading opportunities in Ontario, but haven't been willing to be transparent with us and engage.
Some people have said that Canada has sort of missed the boat on some of the innovation and development because a harder line was taken on these entities, and that there's a balance between innovation and making sure there's no investor harm, and that the line wasn't drawn clearly enough or was drawn in the wrong direction early on. How do you respond to that?
I think we did find the right balance because there is a path that's not too onerous that allows those innovations to flourish, and we've demonstrated that firms can become registered in Ontario and throughout Canada through our efforts, and transparency is really essential. I'm highly skeptical about platforms that promise innovation but won't present themselves to regulators and give us a chance to examine the risks.
And how about the stick, if you will, the enforcement actions?
I think the enforcement actions have been mainly against foreign firms that had a relatively limited footprint in Ontario, and hence they didn't see the need to engage with us. And I think the effect of the enforcement action at a time when a lot of the platforms are trying to gain, be regarded as institutions and gain broader acceptance, that for a jurisdiction like Ontario to bring in an enforcement action and prove its case against them, will ultimately, I think, have a negative effect on how they're thought of globally.
And that's outside of Canada.
Yes.
I think, because also people talk a lot about the fractured or, provincially based regulation within Canada, and you also have self-regulatory organizations, and that's being overhauled right now. So I guess I would mind if you could fill us in on what you do within Canada to sort of make sure that there are no gaps there and that people are working together.
Well, we really are, we didn't start on one page, but among all of the CSA jurisdictions, as we were finding our way in how to regulate this sector. But we are on one page now, and we established a task force that deals, triages and deals with emerging issues, quite quickly in regulatory terms. So we really do have a common approach today to regulation, and there isn't any real opportunity for regulatory arbitrage. So I think it's a great example of CSA success that we've moved forward together in this area.
And can I just ask you, what's the most surprising thing that you've found?
I'm always amazed at the uptake on new crypto assets that have the most, that might have some popular culture appeal, like Dogecoin or Squid coins and things like that, and their uptake and how quickly someone can create a new coin, and it can go from zero to hundreds of millions of dollars overnight, while people are chasing, what the new, entry-level Bitcoin will be. So I'm constantly amazed at how people are chasing those opportunities, and I really urge them to take care.
Well, thank you to Grant for that. He's provided plenty of food for thought for today's discussion. So now I'd like to turn back to our panelists, Jaime, Ndax, and Julia. Let's dig in. So the first question I wanted to ask ties back to our earlier Crypto Decoded panel, where we talked about how crypto had come from the fringes to being something much more mainstream. So I want to start broadly and just talk about, now that crypto is here, what is crypto doing well today, and where is it making the biggest inroads? Like, what problems is it actually solving? So if I can throw to Jaime just to kick us off.
Yeah, I mean, that's a really big question, Barbara, for sure. I think there's a lot of excitement and interest in Bitcoin right now, that's being driven by the inflationary pressures that we're seeing globally. Bitcoin, by its very nature, is a hedge against inflation, because there will only ever be 21 million Bitcoin in existence, and it's the first store of value in history that offers that as a property. So it's certainly a really exciting time to see more and more interest and more institutions and corporations coming to Bitcoin really as a hedge against the inflationary pressures that we're seeing globally. And then from a broader crypto landscape perspective, there's a ton of excitement and interest and really massive innovation happening around Web 3.0, the metaverse, NFTs. That's been a really exciting area to watch evolve this year, and I think it will continue to be an area of excitement and continued innovation into 2022 as well.
Yeah,
to add to that, I guess to add to that, one of the things that cryptocurrencies in general also bring to the space is and this is well known now, that there's a lot of people that don't have the same type of access to the banking system, to transaction of funds, to borrowing. There's so many people, and I think by rough estimations, it's about 2.5 billion people in the world that are not unbanked. And within that number of people, there's about 70% of them still have access to a cell phone, even if it's some sort of very old version of cell phone, or the cell phone that is shared by the village. But simply with having that electronic device, being a cell phone, tablet, or computer, it gives them access to the full array of financial products and services. Also, just to name a few other things that are definitely contributing to success of crypto in general, is the ease of transaction, how quickly you can transact right now, and the cost of doing business. Even if you are transferring the funds from country to country, there's no borders for crypto. It happens significantly quicker. A little example, my brother was getting married and he was having a destination wedding. It took him weeks to transfer money over to pay for the venue. And he was so scared that he's going to lose the venue that he wanted so badly. With the crypto, it could happen instantly. That is just kind of a few things that I think are really important to highlight within the benefits of what crypto is currently offering.
And I think we'd be remiss not to mention that El Salvador has now made Bitcoin legal tender in the country, and that they're the first country to do so, which is a massive, massive move. And they're also keeping Bitcoin in treasury as well. Sorry, Taras.
Yeah, no, I was going to add to all the points that you both have brought up. I mean, right now, the remittance industry should really understand that their entire existence is under threat by crypto. If they don't adopt and integrate the technology that's there, they'll have their lunch eaten very quickly. You look at the Chivo wallet that's had the highest uptick in usage in El Salvador's history. Over 3 million wallets have been registered, transacting almost daily. You look at innovations that are happening on Twitter and numerous other technology platforms using what's called layer 2 technology that builds onto the layer 1 base Bitcoin network to allow almost instantaneous transactions to happen with instantaneous settlement. So that's the other thing that people don't understand, is that with Bitcoin, when you complete a transaction, that transaction is final, right? You don't need to wait another 60 or 90 days for the value to actually move to your legal ownership. It's instantaneous as soon as the transaction is settled onto the blockchain. So that's one of the key innovations. So Western Union, you better wake up. I mean, you look at Visa and MasterCard, they see what's coming. They see the writing on the wall. They're dedicating millions of dollars to ensure that their entire ecosystem, which comprises of millions of merchants globally, are front of the line to make sure they're integrating digital asset technology into their platforms.
And I guess to add to that, I think it would be a valid point, based on the discussion here. I mean, we're all moved to shopping online. And that really helps with, for merchants themselves to prevent the chargebacks, because all those transactions are going to be final, non-reversible. And once again, it's a quick transaction. So that definitely protects the merchants as well, and opens up the global trade in general.
I just wanted to follow up on some of these examples of where things are really moving ahead, like El Salvador, and just get a sense from you folks about how big a test this is and what is sort of the infrastructure, backbone, regulatory system there. Are there any sort of risks there that maybe this demonstration will not be what you want to see to advance crypto?
Well, the infrastructure is already in place. They're utilizing the Bitcoin network, primarily using the Chivo wallet. The risks that are happening really, I would argue, are a macro risk, because other developing countries around the world are realizing how easy and quick they can move away from the traditional IMF, WTO-based financial monetary system to really create a technology backbone for their people to have access to individual property rights. Other parts of the world where freedoms may not be as openly enjoyed as we do here in Canada, those areas also are looking at digital asset technology as a threat to the control of property rights amongst their population. So, I mean, I'm a huge proponent because it gives people rights and access to their own assets, but also ensures people have almost a democratic access to technology and being able to transact value amongst themselves. Peer-to-peer is really a democratic principle.
The other thing that's been fascinating to see in El Salvador, both McDonald's and Starbucks were able to get their systems to the point where they were accepting Bitcoin directly within 2 months.
Yeah.
Incredible.
Yeah, and that's a question too, in terms of acceptance, which I wanted to ask about is, where is that tipping point in your view, in terms of the retail and...
Yeah, there's a number of points to that. First of all, you're going to take in consideration the regulations in each and every country. There's certain countries, as we could see by this example, that are accepting crypto assets and welcoming, in fact. But there's also some other countries that put their foot down and said this is not going to be acceptable. And which one of the cryptocurrencies are you choosing specifically for retail? There's a number of factors, and I think that one of the major ones, beside the regulations, I think regulations is huge in all that, but also just general adoptance, acceptance, and understanding of it. That's where I'm really identifying a major gap where people don't fully understand. it is a buzzword, crypto. Everybody talks about it. Everybody wants to have it and get their hands on it. But I think there's a lot of education when, people like us, leaders in the industry, need to really put towards general population. And within Ndax, that is actually definitely one of the, important initiatives that we're currently working on. We want to provide as much information as we can to the users, to the end users, about each and every crypto asset. What is behind it? What's technology behind it? What is the idea behind it? Help them understand. I really truly believe that people should not be getting into anything that they do not have a good understanding of. And that is definitely a major gap that I have been identifying, because young or old, everybody is jumping into it with their eyes closed because they heard this is going to do well for them. It is really important to understand that when you are walking out of the house with that crypto in your wallet, by the time you get to the grocery store to pay for your groceries, it may be worth a lot less, or it may be worth a lot more. So that is definitely, I think we will not see that full mass adoption until there's a little bit more stability within the crypto space, and stability in the pricing, and that would be offered with the mass adoption and just period of time, because a lot of times people are currently using it as a speculative investment vehicle more than anything else.
And that was something Grant touched on. I just want to get to a question from our listeners. There was a question from Eric on this, just in terms of, because it's not widely accepted yet, what should businesses be keeping in mind if they want to position themselves to be able to accept cryptocurrency in day-to-day transactions? Is it too early to be doing this? Eric wants to know.
And, from our perspective, we have seen different businesses entering in a different way, because we do have a lot of business clients that we're servicing currently. And there's a lot of businesses that are just getting that initial exposure of purchasing cryptocurrency for their, business investment, for treasury, more than anything else. But there are also more and more businesses that are offering, exchange for crypto assets. We have seen car sales, house sales. It is mainly within that luxury goods, or, a larger type of investment. We have, we don't see often me going to, buy my milk with my Bitcoin. That is not there quite yet. But I think it is really important, as Taras touched on, money transmittal services. It is really important for them to start paying attention to what is happening. And I think for every single business to start realizing that cryptocurrencies are here to stay, and they will have, some sort of impact on every single one of our lives in the next little while.
Absolutely.
And will it take something like a large retailer, Walmart or a Costco or something like that, to push us over, do you think?
So one thing that we have to understand is that there are already really strong teams that are building the on and off ramps to be able to integrate digital asset technologies into existing value chains, purchasing, online stores, etc. There's a great team in Toronto actually called Phase, where you can actually convert digital assets into gift cards. 40,000 retailers around the world. You can convert your BTC into a gift card for the Bay, for Nike, for Adidas. These type of on and off ramps are already being built. Visa and MasterCard are going to be allowing you to use digital assets to convert, pay down your credit card bill. So these are actually happening. This isn't like, in 6 months from now, we're going to see this technology. It's here already. The teams that are building it out really are just getting started. So I think that, as Julia said earlier, this is going to be impacting our lives sooner than a lot of people think. And, it's better to understand what's going on versus just letting it sit back and happen in front of you.
Yeah, we're no longer debating if digital assets are here to stay. Like, that debate is over. They are. And it's really a question of how does this innovation continue to happen, and how does adoption continue to happen? But it's no longer an if question. It's happening.
To build on that, just to give one example of that, speaking of El Salvador, the team at Blockstream, they've actually developed what's called the Liquid Protocol Network, and it's built on top of Bitcoin. And they've just put out $1 billion bond for the government of El Salvador, where people around the world can participate. Now, this is purely on the blockchain using technology that's existing today to help a government raise capital to then support their local citizens and population. So as Jaime said, it is here.
We talked a bit about the geography too. What's going on very much depends on if you're talking about, a well-developed economy or that type of thing. There are differences. So I guess I'm wondering, because we are trying to look Canada-wide, but also internationally. In sort of Canada and North America, are there sticking points, or is there a value proposition for a retailer? Can you sort of elaborate on that? Why should they do this now, or why are they missing out if they don't?
I think they have no choice, and we have every reason to believe that there's a ton of internal investigation happening. The amazing thing about the crypto community is that it's generally very, very active on Twitter, and they're great investigators. So every time a major retailer puts a job posting up for a digital asset role, that immediately hits Twitter. So we can see that this hiring is going on across the industry.
Yeah, and I mean, as a retailer, the last thing you want is friction at the cash register. And so being able to accept digital assets as payment, as value consideration, I mean, it's a no-brainer. There's a ton of different existing solutions that you can plug into your cash register. Shopify, I believe, accepts BTC and ETH. And there's other examples that you can certainly point at. I believe Amazon's even going to be accepting BTC in the near term as well. So
That's
again, it's really, it's just reducing friction for payment. Why wouldn't you, right?
Well, and I was going to ask too, because you talked about, displacing the current sort of infrastructure around payments and things like that. And there's always been a lot of talk in the industry about the fees, high fees associated with credit cards, small merchants having to pay large fees. So can you talk about that? Does this get rid of that issue? And if it does, why haven't they jumped?
That's a good question. I mean, it really depends on which credit card company you're looking at. I mean, the merchant fees, you're right. It's a huge area ripe for disruption. So, I mean, I would certainly think that it's going to be targeted over the next 12 to 24 months by digital asset companies.
And I mean, the answer is quite obvious as to why the dominant players aren't rushing in. It's going to be a serious margin compression.
Right.
Yeah, and with the fees, it's reducing the all type of fees from transacting between different countries, global fees of moving the funds around, but also reducing the merchant fees and also fees when people are using crypto assets as investment vehicle. Most of the time you can purchase crypto assets or transact them or move them between one wallet or the other, either for free or for very nominal fees compared to what investors are currently paying or people, that are transmitting the funds are paying.
And this is a great panel because you've already jumped into a question I wanted to ask, which is what are the biggest roadblocks to acceptance and mass acceptance of crypto? And we'd already touched on quite a bit of it, but I did want to ask about any sort of pushback from big finance or retail or wherever the disruption points are going to be. Have you seen any of that?
I think I'll jump in here from perspective of cryptocurrency trading platform. As I've mentioned earlier, the regulations, right? We are playing in the same field as all the current investment firms are. And definitely there's a little bit of pushback from traditional financial services because they want us to be accountable to exactly the same rules and regulations. But as you mentioned through your conversation previously there too, there should be a balance. And that's my view is there should be a balance. From the perspective of a trading platform, we have nothing but end users' interest in mind. And that is one thing that we are in line with the regulators, with securities commissions, as well as the other regulators. We're absolutely in line in that point. Where I think that creates a little bit of friction is the fact that the rules, first of all, are extremely fragmented. Second of all, they were designed a long time ago before the existence of crypto. So some things just simply do not apply. With that being said, I do have to mention that the regulators have been wonderful to have conversations with, and they seem to be very understanding on the point that they kind of the side that we're coming from, and they are trying to look at alternatives and just finding that golden middle, if you wish, to find where investors' interests are protected. We're accountable for reporting to the regulators, but also platform is not experiencing any friction because with the regulatory burden, there's additional, onus that is put on us, and therefore it would have additional costs, and the cost would be passed on to the consumer. And we definitely want to avoid it because we want to be able to keep the fees very low in the cryptocurrency world, because that's how it was designed originally. And I think it's really important to cater to the original roots of it. Another thing too, I find it's, another one of the little factors that people are still kind of wrapping their head around, just the settlement, right? Everything happens so quickly. First of all, we're really struggling with figuring out how this is going to be supervised or how the regulators are going to be, looking at it. Is just the fact that we're on 24/7. There's no more Monday to Friday, and the markets are closing at a certain time. From T+2 settlement, where you trade and you don't get your money until 2 days later. Once again, it's instant. You get your money right away, and you can take it out right away, or you could, you do what you want to do with it. So the consumer is more in control. But once again, it brings me back to that same point of education. Because it happens so quick and there's no middleman to hold your hand and make the decision for you. The education piece is really important. So I truly think that regulation needs to be in place to make sure there's no bad players taking advantage of the end user. But I also truly believe that it should be that middle ground, that balance between, all three key players within it.
Well, and I have another question from a listener that ties into this. Frank wanted to know if the banks are threatened by this technology. So who wants to jump in on that one?
It's a great question.
I'm sure that any established industry gets threatened by disruptive innovation, and that's exactly what's happening here. But the large financial institutions are participating already in this ecosystem.
Oh, yeah.
There are tons of publicly traded entities in this space. We are a publicly traded company, so we're traded in Canada and on the NASDAQ in the US. Goldman Sachs came out last week and said they're looking at Bitcoin-backed debt offerings. Yep. So as much as they are probably uncomfortable with the disruption, they know it's here to stay. This is not going away, and they're all starting to participate in one way or another. And frankly, the more and more public entities that we have operating in this space is ultimately good for consumers as well. It's more transparency, it's more openness. This industry is no longer opaque and living in the shadows. It's absolutely coming into an auditable and transparent public domain in a meaningful way. We've seen a ton of flows of capital into this space. Taras and I are both in the mining space, tons of capital flooding in to public mining companies, and all supported by the major financial institutions.
Yeah, and I'd add to what Jaime's saying and actually reaffirm what the chair of the OSC mentioned in his vignette there, is that I think regulation, especially on the exchange side, is needed, required, and actually doing a service for Canadians. I mean, the other day, a great team here in Toronto called BitBuy, they were actually approved by the OSC as a fully regulated marketplace and broker, right? That's the type of activity we should be seeing, where existing entities within digital assets are working with the regulators. There's Brain Capital looking to be a Canadian custodian, working with, large players in the space. Again, exactly what we need. Canadian teams getting registered, working with the regulator, giving backstops to the activity that's happening, and ensuring that Canadians are protected, fully insured on their transactions, and things are done in a transparent and open way. So I don't think the regulations have been bad. I think actually they've been supporting the Canadian ecosystem so that we don't see Quadriga 2.0 or 3.0 happen again.
Absolutely. And I
that's
think that is definitely one of the major concerns. And that's what the regulators really truly trying to prevent. The checks and balances needs to be in place to make sure that at the end of the day, consumers are protected. And just kind of, come back to the point where we started in regards to, what type of threat it presents to the financial industry. The whole, remember back in the days when the industry started and they were saying, we'll take the financial industry down. This is definitely not a reality. I think it will go hand in hand. I think there's going to be a lot of collaboration, a lot of cooperation happening between the traditional financial system. And that actually truly shows through some of the new ETFs that are offered that are tied into with the Bitcoin and hedge funds that are launching. So there's a number of traditional financial instruments that are incorporating crypto asset exposure.
And I think that what this regulation does is also spur adoption. Back to one of your initial questions, Barbara, regulation will help drive further adoption.
Yeah.
Sorry, go ahead.
No, I was just saying that's exactly on point, because people still have this belief that digital assets and the activity around it is some nefarious thing happening in people's basements. And that is the exact opposite. You look at management teams like we have at Core Scientific, like Hut 8, Marathon. There's, not Jaime or myself, but there's a ton of gray hair in the boardroom these days. We're attracting reputable, professional, experienced individuals to really drive this industry forward. The days of the dark web really being the central point of activity are far behind us. It's only 2% of activity these days on the digital asset ecosystem in totality that have been traced to illicit activities. The US dollar or other traditional financial activities, it's actually far higher than that. So this is the exact opposite of what reality is. And as Julia said earlier, education is absolutely paramount. The more the public understands of what the truth is, the more they'll understand that this is technology innovation. This is what happens. From my MBA classes, there's the economist Schumpeter, creative destruction. We will see destruction within existing industries until they start adopting and integrating the technology. And then we'll see the real creativity, the real growth that this will spurn forward.
Well, it's interesting, just to follow up on that. I wonder if there's going to be any of the innovation from the crypto industry that's going to bleed into traditional financial services. Do you think like 24-hour service, that kind of thing is going to, and if there's anything else, please elaborate.
Yeah, there's currently fractional share trading is offered in certain places. That is definitely coming from crypto, because you obviously don't have to buy a full Bitcoin. You can buy a fraction of it. With some of the current stocks that are trading on TSX or Dow, some of them are extremely expensive and people still want to have exposure. So that has definitely been adopted. And I do truly think, the settlement time went from T+3 to T+2. And I think that may change as well to something similar to what the crypto is currently doing. And online discount brokerages, they lower their fees to keep up with the current trends in the market. I remember from my personal experience working with full service brokerages, the fees were quite high. And some of the transactions, those fees were more than what I was making in a month, which I just, every time I looked at it, I went, oh, that's not a reality any longer. Those services are accessible at significantly lower prices now, even in the traditional financial markets. Robo-advisory, that is all kind of driven by the new technology. So there's going to be a lot of things. And I do truly think that 24/7 trading would be a reality sooner than later, with us being constantly online with the new technology, with, everyone got a phone in their hand. We're constantly connected. And we are expecting instant service. We are expecting, the constant stimulation. And that's where the banks and traditional financial industries will be pushed into that innovation by the crypto industry.
Well,
Yeah, and I mean, most of the existing financial folks, they're not going to build internally. They'll be looking at really strong digital asset teams for acquisitions. I mean, that's what's going to happen. There will be a ton of M&A activity that will really ensure that the integration is done with the best technology, who is willing into the companies that are willing to pay the price to really be that market leader in adoption integration. And we're seeing this with like Bank of America and Fidelity. It really is happening now. It's not something that we're saying is going to happen. It's already happening now.
Well, and I was going to mention when you talked about sort of the graying of the boardroom, that, you know, I think all of you folks and most people in this space have come from traditional financial services or traditional technology or both. And so you have a foot in both, which makes it kind of an interesting perspective for our listeners, I think, too, because you understand both sides, as Julia, you were saying in your example. So that's really helpful. And I'd want to ask too, because I'm a little surprised at the embracing of regulation on the panel. And so I'm just wondering if you can talk a little bit about sort of the reduced oversight that people associate with this space. And also when you start laying down rules, are there good players that are being sort of chased out of, you know, fear or, you know, this isn't what crypto is about. I don't want to go talk to a regulator, that type of thing. Have you seen any of that?
Majority, I think, of the players do welcome the regulations. And of course, you know, you're going to keep in mind the roots of crypto, right? Where it was originally anonymous, there was no regulations, the banking or the regulators should not have anything to do with crypto. But I think after we've seen some bad players showing up in the space, and, you know, Quadriga is a really good example of that, people really, you know, taken another look at it. They thought of it and they go, okay, maybe there is a benefit of having the regulations. It is really important to keep everybody accountable. That's how everyone will be able to provide the best service possible. The best, you know, at the end of the day, once again, coming to my initial point, we do have the best interest of the end user in mind, but sometimes putting certain layers of protections that are detected by regulators will ensure that is actually those requirements are met. And I think it is really important keeping the balance, right? It all comes down to keeping the balance. Putting very heavy regulations in place will potentially drive some of consumers as well as the market participants out of the space. So it is, and I know, you know, with the mining companies as well, not just the crypto platforms, trading platforms, there are regulations that are coming in place, which is, you know, fair playing field, which is totally reasonable as long as we keep everything balanced.
And I think it's important for people to remember that Bitcoin is an open and transparent system. It is a trustless ledger, and anybody can see every single transaction that's ever been processed on the Bitcoin network. There's never been anything so transparent as a financial instrument in the history of the world.
Exactly. I mean, when you're transacting with somebody and they say they're going to send you a Bitcoin, you can see the wallet that they're sending the Bitcoin from before they send it to you. It's the exact opposite of the obfuscated system that we have today. Right.
Exactly.
So it's a public, trustless system that works off a consensus mechanism. Bitcoin uses mining, proof of work mining. Other protocols use other things. But at the end of the day, the reason it's so valuable is because it is fully open, and it's not necessarily anonymous. It's pseudo-anonymous because you can follow transactions. And that's one of the reasons why we'll see fewer nefarious transactions happening on it, because we're getting better at tracing transactions throughout the network itself. I mean, Chainalysis, numerous other companies out there provide these services to law enforcement. Earlier this year, when there was that massive hack, I forget the name of the company that was hacked, but regardless, the FBI was able to actually reclaim the Bitcoin that was demanded on the ransomware attack, and it was returned back to the value to the victims. This is what Bitcoin does.
Colonial pipeline.
Colonial pipeline. Thank you.
Yeah.
Like, this is the transparency that we preach and that we show, and then we actually see real world examples. It's the opposite.
Try getting your suitcase full of cash back.
Exactly.
Okay. And I just want to touch on crypto mining because of our panel expertise. Before we get too far into it, because I hear we have some audience questions flowing in. So for the next few minutes, if we could just talk a little bit about mining. There has been some focus on the environmental impact and energy use. Can we talk a little bit about that?
Oh, yes, we certainly can. Jaime, do you want to start?
We can talk a lot about it. Taras and I are both very, very active participants in the Bitcoin Mining Council, which our organizations help to form in an effort to drive transparency, education, data to tackle this exact issue. And the reality is Bitcoin mining uses the highest mix of renewable energy of any industry on the planet. Bitcoin mining acts as a stable off-taker that can work in conjunction with power producers, with communities, with the grid to help actually stabilize the grid and monetize otherwise wasted energy. So we could have an entire hour dedicated just to this topic, but it's an incredibly exciting space to be a part of. And we see Bitcoin mining really as part of the solution to a greener planet, not a negative impact whatsoever.
Yeah, that's a really good synopsis to it. I mean, one of the things people have to understand is renewable power and sustainable power is intermittent. And so what you have to do is you either have to build massive batteries, flywheels, or water reservoirs essentially, or you can overbuild for what the population needs, have off-takers such as a Bitcoin mining facility like the one behind me, to be able to have that controllable load response is what it's called, where if the population center needs power, we can actually turn down our facilities at an instant notice. Also right behind Jaime. So that's one thing people need to understand is Bitcoin mining can actually drive down the cost of renewable power because we incentivize what would otherwise be stranded power to be economically viable. And this is also one of the things that really bothers me about what's happening in Canada is we have massive supplies of hydropower that we sell at a loss. You know, the provinces on the eastern side of Canada, Quebec, Labrador, Newfoundland, we've got a ton of hydropower that is being sold south of the border at a loss where we can actually have real jobs created at real facilities, giving Canadian jobs and creating Canadian economic prosperity here. You know, also making sure that that hydro is used in a way that benefits local versus being imported or exported south of the border.
And the beautiful thing about Bitcoin mining is we can set up near the power source. So we can actually bring jobs to areas that have power that are dying for innovation. They're dying for good paying, highly skilled jobs. And if we set up mining operations near these power facilities that are located often in smaller, more remote communities, they're not in dense urban centers, but we can take our production to those power sources, monetize it, and bring jobs directly to those local communities that so desperately need it.
Yeah, otherwise we're literally heating the air.
Sorry, I have absolutely zero experience in mining, but I do have something to add to this anyway. We actually found some shift in Calgary. So we're in Alberta, and as you know, we're heavily invested in oil and gas. But with the last economic downturn and shift that we experienced, we actually noticed that there is a number of oil and gas companies that had no place to sell what they were producing. They actually converted their facility that was sitting empty, not used at that point in time, into mining facilities, turning into, from being just about to shut their doors to being extremely profitable businesses. We also have seen some of the miners utilizing the sun with the solar panels, setting up major operations with the solar panel generation. the energy. So there's a lot of different possibilities, and we actually welcome all those miners to our platform as well. And that is obviously how I came to know those ones. And it's interesting. It really helped to fuel the economy a little bit more.
Yeah, that's exactly it. I mean, to build a large-scale mining facility, you hire local contractors, hire local trades, and then the long-term jobs that are created really do have a fantastic spillover effect to the communities that embrace it properly. There were horror stories in the past, but luckily, companies like Jaime's and like Core Scientific, we really work with the local communities to ensure that what we're building benefits, and it's a plus is what we call it. And it really is a travesty that Canada and the politicians really haven't understood that there is a massive amount of capex that goes in infrastructure, long-term jobs. We really need to open our eyes to it, because we're having our lunch eaten by the folks in the U.S. Where Core Scientific, we have all of our operations for now.
I was going to just mention one thing on that when we're talking about opportunities for Canada, because we had a question from Jeremiah in our audience who wanted to know why spot ETFs are being approved and deployed in Canada, but denied in the US. Apparently Fidelity is that was mentioned, waiting for US approval, but has launched a product in Canada. Is that an opportunity, do you think? Are there other opportunities for Canada in crypto to really dominate?
Well, that was actually brought up yesterday in Congress at a hearing that covered digital assets specifically. And actually, the Fidelity Bitcoin ETF, spot ETF, was actually mentioned directly. And again, as I said earlier in the conversation, regulations in Canada haven't been the worst. We're not draconian, certainly not over-regulated. And I think there are opportunities for Canada to really take leadership. Many people don't know that Ethereum, one of the most recognized digital assets, was actually founded in Toronto by Vitalik Buterin and a bunch of local Toronto folks. So really, Canada is a hotspot for digital asset innovation. I think it'll continue to be so.
Any responses from the other panelists on that? Opportunities for Canada?
Yeah, no, Canada's done a really, really good job. I mean, we were the first Bitcoin ETF. We also have an Ethereum ETF, which really leads the way. So I think we're doing an excellent job in the financial arena. I think where we really need to show some improvement is supporting the mining ecosystem and putting Canada's energy to better use, frankly.
Yeah, for the ETFs to really be launched, it requires support of financial regulators. So that's where I truly can applaud to them for being open-minded, for being supportive of this space, and to give the opportunity. I find with majority of the regulators, we kind of wait on the sidelines and see what US is doing first, and then make the decision based on what the other regulators are putting in place. This is definitely where we changed a little, returned for better, and start making decisions prior to any other jurisdictions making them. So I really truly hope that will be the same with trading platform operations and other regulations as well.
Okay, that's great. And I see there's another question from a viewer. What are your thoughts on central bank digital currencies? I'm interested in your response to that.
Who wants to take this one first?
I think we're all going to say the same thing. I mean, who uses paper currency anyway? Like, no one uses paper currency, but ultimately it's still centralized. It's still government controlled. The value of digital currencies and Bitcoin in particular is that it's decentralized, that it cannot be manipulated. It can't be overinflated. And so I think central bank digital currencies ultimately will come because digital assets make sense. I don't think we need paper money in its traditional form. And I also think that central bank digital currencies, as they come into existence, will help fuel adoption of Bitcoin and other cryptocurrencies that offer different value propositions. So I think ultimately there's a world where they all live happily together, but a CD does not replace the value of Bitcoin or what what the ecosystem that will continue to evolve around Web 3.0 brings. It needs to be borderless.
And I want to answer this question with a question. How is it different from what we're doing right now?
Exactly.
We all use debit cards, right? How often do you actually have a paper bill? Pretty much never. It's all on that little card, and it's not much different from, you know, what that's going to look like in the future. It's going to be the same money, governed by the same governmental agency, will be still linked to the same card. That's about it.
Yeah.
So it's
And in
not,
fact,
I don't think we're going to see the difference there at all.
No, and during COVID, nobody accepted paper money anymore.
Right.
No one wanted to touch your
They're so dirty.
your dirty money. Yeah, exactly.
It's a hygiene issue.
Yeah, and if you do get it, you spray it both sides.
I mean, I think CBDCs are really an example of the existing financial players waking up and saying, holy crap, these technology geeks maybe are onto something. Maybe we don't need to have printing presses pumping out bills because, you know, the world is really moving past that. The one thing that I would hope that the central banks really take into heart is that the ideas of transparency, openness, and public auditing, so that when a government decides to increase its monetary supply by 25%, the population can see where the money's going, right? Because right now, you don't know where it's going unless you dig in. And a lot of times they can write blank checks and have slush funds, whereas with a CBDC that's fully publicly auditable, like the Bitcoin network, I think that'll make a lot more politicians understand that their population is watching where they spend their money, because those tax dollars are hard earned.
Absolutely, and it will provide for more transparency, but also, you know, just kind of bringing back to the point of environmental impact of mining. Think about environmental impact that printing actual paper money has on the environment, right? Those bills, and now, of course, we improved. We got those really fun-looking bills that you can't rip, you can't destroy, pretty much. But at the end of the day, majority of the bills, they do get ruined really quickly, and we're back to printing the money, and that has, I think, even bigger environmental impact than digital currencies and mining.
Okay, thank you. For the last couple of minutes, I just want to get this question in from Steve. He says, you said prices are volatile and the amount of tokens are finite. How do you see prices stabilizing over time?
Oh, so in regards to Bitcoin specifically, because that's my bread and butter and my favorite digital asset, I think the more institutional adoption that occurs and what we're actually seeing, the more the price will actually stabilize. The fewer days of plus 10, 20% movements that we'll see over the longer term. So really, it'll be about institutional adoption, people looking at Bitcoin as a reserve asset, governments looking at Bitcoin as a reserve asset because of its finite supply, because of its hard currency value, hard asset value that we provide from the mining function. I think all those factors will really drive to a more stable value for BTC over the long term.
But as of right now, I think it would be still really important to keep in mind that any crypto asset is quite volatile. So, we're not in business to provide advice, but I always would tell people not to invest more than they could afford losing if they are investing it for short-term, specifically short-term investment, or they are hoping for that quick gain. It doesn't work that way. You got to understand it. You got to make sure that you understand the volatility and the price fluctuation on every single one of those crypto assets.
And just to Julia's point earlier about education is so critically important. Not all of crypto is created equally. You really need to understand the properties of Bitcoin are unique and stand alone from the rest of the ecosystem. And that's really important to understand.
Yeah, agreed. Even stable coins, which technically are pegged to a dollar basket, typically, you need to make sure you're putting your value into stable coins that have been audited, that you know the provenance of where they've come from. So even on what is a stable digital asset, you need to just keep yourself educated as to where you're putting your value.
Okay, that's extremely helpful and valuable insights. Any last words in our final minute? Anything I haven't asked that you think our audience should know?
I think this has been incredible, and really appreciate you guys taking the initiative and putting on this series. I think it's really, really important.
Yeah,
Thank you. And thanks for having us.
Well, and I want to thank you folks for joining us and the audience, and also our presenting sponsor, Ndax, and our supporting sponsor, Netcoins. Also, I would like to throw in a special thank you to the OSC's Grant Vingeo for sitting down with me. We'll be airing more from that interview with Grant on financialpost.com in the coming days. And I also wanted to mention that please don't miss our upcoming event in the series, which is going to be called Crypto What's Next, and it's happening on January the 13th. To sign up for that, please visit financialpost.com/crypto. Thank you very much to everyone, and I hope you enjoy the rest of your day. Appreciate all the input from our panelists today. Thank you, Julia, Jaime, and Ndax. That was wonderful.
And thank you for having us.
Appreciate the leadership on this topic.